My investment portfolio was quite flat in January. I received dividends from 4 companies, and one of those dividends is from a company that stopped their dividend all the way back in 2020 during the pandemic. So we will see what they've paid me since reinstating their dividend. The portfolio is sitting at just around £12,800. I'm going to show you what I got paid in January, compare this to what I received last year, and I'm going to show you what I'm going to receive next month. We will go through my portfolio as we do this. Let's get into the video. My first dividend was from Pepsi. Pepsi's stock price is currently sitting at around $166 and has been pretty flat since October 2023. I've been adding to the position more every month as I believe the company is still a good price. And I think the stock price will continue to grow. And they have a continually growing dividend as the stock price grows. Pepsi's dividend growth rate has been pretty solid. Over the last 10 years, it sits at 8.1% per year. And over the last 3 years at 6.1% per year. When we compare this to Coca-Cola, another company in the non-alcoholic beverages industry, we can see that Coca-Cola is slightly off the mark in terms of dividend growth, which is one of the factors that can be looked at when choosing a company to invest in for dividend income. Pepsi paid me £5.39 on the 5th of January. Looking at what they've been paying me in the past, we can see that in September 2023, they paid me £3.34. In June, they paid me £1.31, and in March, they paid me 70p. Now, this growth is mainly from additions, but it's nice to see the increase quarter over quarter. So my next dividend was from Disney. Disney recently reinstated their dividends, and they've paid me some cash. Disney has had a horrid time since around 2021. Disney Plus has been doing terribly, still making a loss. They were having a bad time with their new film and TV releases, and the parks were not as full as they used to be. But then they put all the prices up, and they recovered a little bit of their revenue. But since they've made a few changes at the back end of last year, Bob Iger came back in as CEO, and now they've reinstated their dividends. They are due to report earnings on the 7th of February, so we'll see if Disney is truly recovering. And I think after that date, February 7th, I'll make a decision on whether I keep hold of Disney and keep buying into the position, or I can sell out of the stock completely. So the announced dividend was 30 cents a share, and I hold 6.3 shares. So on the 10th of January, Disney paid me £1.26, bringing my total for the month to £6.65. My next dividend was from GSK. Now GSK has been doing pretty well since the middle of 2023, up 11% in the last 6 months. I recently did a stock analysis on GSK, where I talk about the company as a whole and whether I think it's a good buy at these prices. GSK's dividend yield is sitting at around 3.6%, which has come down slightly due to the recent good performance. And I think it's good to note that GSK's dividend is very volatile due to the nature of the sector that it's in. GSK is one of my bigger holdings in my portfolio, sitting at around 11%, which has been coming down slightly because I haven't bought any more GSK stock since about February 2023. So now that I've received my dividend in January, I finally received a full year of dividends from GSK. As you can see here, my first dividend from GSK was in January 2023. My average price per share is £13.75, and this is still below the current share price of £15.48. From the 75 shares that I hold, I was paid £10.50 in dividends on the 11th of January, bringing my total for the month to £17.15. This is my dividend tracking spreadsheet, which I use to track the holdings I have in terms of price and dividends received. There are 2 dashboards, one for your portfolio and stock performance, and then there is a dividend dashboard, which shows you your performance relating to the dividends you've received. There are other features, such as the future dividends and portfolio calculator, and live off dividends date. I update the spreadsheet on a monthly basis, so it includes any changes I make, and also you can see my portfolio in depth. You can get access to this and get monthly updates through the link in the description. My final dividend was on the 12th of January from Realty Income. Realty Income is a monthly dividend payer, so we will be seeing this every month. Realty Income is an American real estate investment trust that invests in commercial real estate and has tenants such as B&Q and Tesco here in the UK, and some other big names in the US. The price is currently sitting at around $55, and has had an amazing recovery since November, when the sentiment on interest rates was looking more towards rate cuts in 2024. But when the recent inflation data came out in January, it showed that inflation had halted and had creeped up slightly. So companies like Realty Income saw a slight correction in light of this, but I don't expect this to affect the company long term. The current dividend yield is 5.5%, and with my 34 shares, I received £5.82 from Realty Income this month. So my total dividends for the month of January was £22.97. So looking at the investment dashboard in the top right corner, we can see that my total return is 8.65%, which means that my total return in terms of pounds is £915 and 90 pence. My portfolio value is sitting at £12,800 with a cash holding of £1,560. And that cash holding is sitting at 11.3%. Now, in my last video, I did say I was aiming between 10 and 15%. And that's still sitting in that range. We can see that my actual yield on cost is only 2.26%. Because I keep adding to the positions, it brings the yield down. Because I haven't received dividends on the new positions that I've added to. If we have a look at this graph here, we can see that my biggest sector is technology, sitting at 24%. And my next biggest is consumer defensive at 23%. And then we can see here my smallest is insurance at 1%. I have a few others, which is real estate, healthcare, consumer discretionary. My ETF is sitting at 8%. Utilities at 6%, financials at 6%. So if we look here, this is the pie chart of all of my stocks. We can see my biggest position is realty income at 13%. My next biggest is Microsoft at 11%. Then we have GSK at 10%. Unilever is at 9%. And then, and Pepsi is also at 9%. Then we have my ETF VWRL at 8%. Google is also at 8%. And then we have a few others at 6%, which is Lloyd's, SSE. And then we have Tesco at 5%. Disney, Amazon, and Apple at 4%. And then Aviva down here at 1%. If we look here at this graph, this is my positions in terms of how much they are up and down. So you can see I've got three big winners, which are Google, Amazon, and Microsoft. We can see here that Microsoft is up 52%. Amazon is up 54%. And Google is up 44%. I have a few positions which are down. The main one is Disney at 10%. Realty income at 8%. Lloyd's is 7% down. And Pepsi is 5% down. Now, if we come over to the dividend dashboard, we can see here that my January 2024 results shows £22.97. And if we look a quarter ago, 3 months ago, it was at £17.97. So quarter over quarter, we're increasing slightly. Usually companies pay quarterly. I have a few UK stocks which pay bi-yearly. So that means I receive dividends twice a year, which is why September is so high. But most of my companies pay on a quarterly basis. So we can see here in this graph, my year one, which is my first 12 months of receiving dividends, I received £128.77. And in year two, which is the last 5 months, so I've only been receiving dividends for 17 months. In year two, I've received £125.95. So I've nearly overtaken my year one dividends. We can see in this graph that my portfolio value is increasing over time, month to month. And if we look here at my average dividends over the next 6 months, we can see that it is increasing. This is based on my average dividend yield, and it calculates what I should be receiving month to month based on my portfolio size. And this graph is the dividends I've received based on sector. So we can see my biggest sector is healthcare, which is GSK, because I've been receiving there around £10.50 from them quarterly. My next biggest is consumer defensive, which is like Tesco and Pepsi. And then my next biggest is real estate, which is only realty income. And that's going to be quite big because I receive that monthly and also it's my biggest position. And then we can see my smallest is consumer discretionary, which I think I've labeled as Apple or Microsoft. I think it's Apple or Microsoft. Might actually just be Apple. We can check that actually. If we come to the info tab, we can see consumer discretionary is Amazon and Disney. Oh, that's actually Disney. So that 0.62% is the dividend that I received from Disney this month. So if we look here at my goals, I'm still on my way to a £20,000 portfolio. I'm about 65% of the way there. I'm quite far off of £100 a month in dividends. I'm currently sitting at about £20 to £25 a month. I need to triple, quadruple my portfolio size to get anywhere close to that. And then 10 years of investing, I've been investing for about 1.5 to 2 years. So again, we're about 20% of the way there. And then finally, making an ETF a core position of the portfolio. The goal is to make VWRL 25%. And currently we're sitting at 8%. If we look at the transactions month to month for VWRL, so if we come down here, we can see that I started adding to the position in June 2023. Roughly here. I've been adding roughly 1 share a month. In October, I've added 2 shares there. This tab here tracks like the investments that you've made, all the buys and all the sells that you've made. So you can see in January, I've added £535 worth of buys. And in December, you see here, I sold out of British American Tobacco and I made some more buys, adding up to about £600. This spreadsheet is available in the link in the description. You sign up for the newsletter and you get it sent out to you every single month. Before this video got released, you would have received this spreadsheet in your email inbox if you've been signed up to the newsletter. And if you go down in the link in the description to sign up now, you'll receive this updated spreadsheet. And my last video, I did an in-depth walkthrough of how to use this spreadsheet. It's quite long, but the introduction to the video, I actually explained it very quickly in about 2 to 3 minutes. So if you don't need any of the technical advice, then you don't need to watch the rest of the video. That is the end of the video. If you enjoyed the video, give it a thumbs up. Any suggestions on improvements to the video content or ideas for content going forward, please leave a comment below and I'll give you a reply. And you can check out the investment dashboard in the link in the description.